Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for October 16th, 2023. We are recording this at 1 p.m. Eastern Time, and this is episode number 405. My name is David Cosmeter. I'm the creator of TimingResearch.com, and today I've arranged for Sonny Harris to join us again. And the option professor is back to moderate, so I'm going to turn it over to him.
Okay, thanks a lot, David, and welcome everybody. We've got a lot to talk about here, and we've got Sonny Harris, who has her Sonny bands, which are very effective to try to figure out support and resistance and trends. And we've got a lot of markets that are doing a lot of movement. We have the stock market moving around a bit. We've got the gold. We've got obviously interest rates and the price of crude. So there's no shortage of activity out there. And so we're going to try to help you figure out what's what. Before we get started, we're going to talk and get a little background on Sonny Harris. Sonny, a little background on yourself and what's going on at Money Mentor.
Thank you. I am a mathematician, trader, programmer, and author. I've been a professional trader for 42 years. I love to teach other people how to trade and help them get better. I'm an easy language programmer. If you want something programmed, give me a call. I do publish my phone number. It's my cell phone, 760-908-3070. And I'm the author of 8 trading books now.
So we got a lot to learn there. And then at the end of the broadcast, you'll explain how to get people to get a hold of you as well and what you can offer maybe as a special deal. Let's get started with what we always talk about in the beginning on a Monday is we opened today on the S&P. Let's put the S&P up there and figure out where we opened.
Right there we are.
Okay. And then where do we think it'll close on Friday?
Let's spread this out a little bit and see. Well, I think it's going down because on my...
This looks like you've got soybeans up, not the S&P.
Oh, I had the S&P up. Yes, well, we don't want to know about soybeans.
Not right this second anyway.
Yeah. There. All right, so it's the same answer. My Sonny bands are the green and blue lines that surround price. The purple and gold lines in the middle are my dynamic moving average. We went above the purple DMA and back down below it, and now we're trying to go above it again. By Friday, I think it's going down a little bit, maybe even down to the lower inner band at 42.91.
Yeah, I got a resistance point between right here where we're trading and about 44.33. Where's your your purple line comes in around?
Purple line comes in right around 43.73.
Okay, and what's the
we're
44?
Above that right now.
Right. What about the
44.30?
Yeah, 44.33.
Right there.
Yeah. So there could be something there because there's a former little high there. But anyway, the momentum definitely turned up earlier today, and it was all systems go. If you look at a 1 day chart, I mean, the thing turned up pretty much at 43.65.
Let's look real quick at that. Yep.
You know, that was pretty easy pickings there.
Yeah, definitely.
And even on the 1 month.
I think today we're going up higher still.
Yeah, yeah. Well, like I say, there's a lot of strong momentum here now.
Yeah. You see this these red lines going down? That speaks to the market turning, because that's the measurement between the gold and purple DMA lines, and you see the distance is getting closer and closer and closer. Typically what happens is this goes below the 0 line and becomes purple. And we're moving down if that's the case.
The what do you call it? If you on my longer term graphs that I use, the 20-year, I had a real big traffic jam right around that 42 20 42 40 area. Market went right in there. It was a fabulous buy period in there, and then the market is just snapped out of there. Yeah, do you see that 42 40 area?
42.40 right in there. Yeah. Yep.
Yep.
It did.
I have these moving averages that I use, and they all kind of came in at the same time. So yeah, I mean, you know, the market definitely has some support underneath, and it has some resistance above. And it, you know, like I say, this you have a 44.07, 44.08, and you know, like I say, if it gets if it starts reverting back down, you think by the end of the week, this resistance area somewhere in this neighborhood could hold?
I do.
Yeah.
The support level I have is 35.58. I mean, that's on the
Well,
monthly.
I think that's if we break the 4,200. Yeah.
Yeah, I think we're going to.
Yeah. And, the interest rates are, at some point going to wear people out, I guess, is what the theory is.
Yeah, I think so.
I mean, how long can we have 7-8% mortgages and the houses don't come down at all?
Oh,
And how long?
I bought a house at 11% years ago.
Yeah. You,
And
but
made a whole lot of money on
but it
it.
wasn't. Listen, when you bought them at 11%, it wasn't the price it was today, right?
No, it certainly
There
wasn't.
you go. So the 11% had a relationship with the price, just as 7 or 8% should have a relationship with the price, and it shouldn't be a relationship that the price would go up. You know what I mean?
Hmm.
So that's the only thing I'm saying. But I mean, it hasn't happened yet. But just because it hasn't happened yet doesn't mean it's not going to happen, right?
That's true.
And then on the PE ratios, we're at 5.5% almost in money market. I mean, that's got to put some effect on some of these PE ratios at some point.
Hmm. Well,
But
people are going into bonds and bills because it's safer than, in their mind, it's safer than the stock market.
yeah, well, of course, that can be also a contrarian deal where you get a big rally out of that.
Hmm.
With regards to some of the main stocks that you watch, you watch Apple. You want to put Apple up there and see what that actually looks like?
Sorry, this is taking a minute here.
Sure.
There we go. So Apple down today, down to the flat DMA right there. And that again speaks, well, this one is saying, see how the green lines have come up to the zero line?
Yeah.
That tells me Apple's going to go on up.
Yeah. Well, in the short run, it's had it pull back down to its support zone, which comes in right around that 167, 170 neighborhood.
Right there.
And again, when it had that big rally, the relative strength was way weaker than the last time it rallied to like 180. So that made it very suspicious up there. The great selling area around 200, 195, 200, 194 even. Yeah.
It's going to be a while till it gets up there, I think.
Yeah, but can you expand it to include like last month? And then did you get good sell signals up there at the 193 area?
And right there was the sell signal.
There you go. That's what I'm trying to say. And that's a nice ride from 193 down to 165.
So I had a short signal here, a buy signal here, and another short signal there, and then a buy signal here. So I'm in a buy position right now.
Yeah. This number on some of the other graphs comes in at around 178 to 181. You see some resistance, 178, 181, that could maybe be a problem.
178 for sure, because that's where my DMA line is, right there in the middle of that.
Yeah.
And 181 is up at the upper inner band.
Yeah, what do you think about, because this is a dilemma I think that I'm looking at now, and I wanted to get your experience on it. On Apple, on my shorter term graphs, like the one, the 1 month, got a lot of congestion at 177. But let's just talk about the 1 year. The 1 year, I have a moving average rising coming in at 176 and change. And then on the longer term ones, I've got the resistance coming in at around 181, 178. That's kind of a log jam between that area. So whichever way it breaks out from here might be significant.
Let's
Like
see.
in other words, if we can break above 180, it might go up and retest the 200. Likewise, if we break under 170, going down towards 155
it could go either way just as easily, couldn't it?
Yeah. This would be a good time to price out a strangle where you do calls and puts at the same time and see if the premiums are not prohibitive, or go to call spreads above and put spreads underneath to negate or offset a little bit of that premium cost.
There you go.
Yeah, because like I say, it does seem. Now, I don't know when their earnings come out. Let me see if I kept a little bit, because the earnings season is here, and that's probably going to move things. Yeah, on the 26th comes with Apple. So the 26th is next Thursday, right?
Next Thursday.
Yeah. So I'm sure by next Thursday, we'll have a pretty good idea of which way it wants to break, right?
And we have a lot of earnings reports coming out this week as well, not on Apple, but other things.
Yeah, I was following the tech ones that come out. Amazon's on the 26th, Microsoft and Google on the 24th. Meta is on the 25th. So next week is all tech, and then the last week of the month. Well, actually, starting next week also, oil is going to be coming out. Your Exxon, Chevrons, Halliburton, Schlumbergers. So next week is going to be get your seatbelt on because with these earnings coming out and the way prices are.
And
Um,
all these charts are showing stagnation right here at this DMA.
yeah.
So nobody knows which way it's going to go. They're all scared to make trades.
Yeah, yeah. And yeah, so that probably will mean
And that's
volatility
true.
has a good shot of picking up quite a bit between now and the end of next week, which is 9 trading days away.
Mm-hmm.
So
I think that we're just stagnating right here. I call it stumbling.
yeah,
That's
yeah.
congestion is a stumble.
And you got the geopolitical thing, and the thing that people are starting to actually talk about a little bit is these fiscal deficits, which are as a percentage of GDP is just going off the charts.
Yeah,
And I guess people are concerned that you can't borrow forever, but that story's been going on for so long. You just
it
don't
has
know.
been.
Yeah, you just don't know what day it might turn into an importance because
Yeah. All
uh,
we need is one more bank failure.
yeah, they just and the other thing is the banks like Bank of America that are holding on to all of these mortgages or whatever they hold on to that have low interest, they have paper losses there.
They sure do.
And so it'll be interesting to see. I guess this week we get the B of A, right?
That's BAC, right?
No, Bank of America, BAC.
That's what I just said.
Yeah, yeah, yeah. Trying to see where they come out. Yeah, on the 17th, which would be tomorrow. Okay, so
They're all at the
tomorrow.
same place. They're all right here, just
Yeah.
in congestion.
But the likelihood of volatility may be picking up quite a bit with the announcement of their earnings tomorrow could be pretty significant. So, this would be the time if you were a speculator that you might price out some calls and puts on this stuff because it's right
Yeah,
at
and
27 bucks.
what you said is right. They need to be on both sides of it.
Yeah. And the option premiums on B of A may not be that rich because of the fact that the stock has been kind of dead between 28 and 26 here for quite a while. Had one spike up to 32, but that didn't last.
Yeah, I think we're stuck right here for the time being.
Yeah. But again, they're going to get news tomorrow. And
And
sometimes,
I talk about attractors all the time. Look at
yeah,
this.
right.
Look at this. This hits here, it hits here, it tries to hit here, it hits here again, and that's where we are right now, right at that attractor.
Yeah.
So it's got to go up or down. It can't just sit here forever.
No. And but put up JP Morgan, they had good numbers and the stock rallied pretty good. Has it held water or is it backed off?
It's probably right there at that same level again.
Because it went up towards 150.
Come on. There we go. Oh, look.
Yeah, so it's
above the DMA.
Yeah. And yeah, because those were the options before the report that I thought were interesting when the stock was down at 140-ish. Yeah.
Huh?
And the 150 calls were very cheap and they exploded after their earnings report. Now, you got to be Jack be nimble, Jack be quick. You know what I mean? Once it
Yeah.
jumps up like that, when somebody delivers you a nice, a cake, you eat it. You know what I mean?
Take the knife out first.
Yeah, you take the knife out. So the thing is, you had an opportunity to sell 150 calls, $3 in the money. And
Yeah.
believe me, they weren't going for $3, before that report.
Yeah.
And of course, with a gap and
it's got a gap and then it came back down again today.
Exactly. So, the idea that it was going to, and of course it was very far away from the moving averages. So that's where reversion back to the mean comes in.
Which moving averages do you follow?
Well, I follow a whole bunch of them. And, like I say, I try to go over them with people, when they call in and give them the exact ones that I work with. So, Yeah, if anybody's interested in knowing exactly which ones I'm using and how they work, just get a hold of me and we'll go over that, because that's what I do. That's what I do with the 1 hour meeting I have with people, is explain my indicators and explain
Oh,
how I
that's
use them.
cool.
Yeah, yeah.
These are the three moving averages I watched: the
Mhm.
200, the 55, and the 21, both Fibonacci numbers.
Uh-huh.
And you can see we're greater than the 200 and the 21, but we're less than the 55 right now.
Yeah. Well, that's the beauty of the proprietariness of what everybody uses. You have your set and you have your interpretation. I have my set and my interpretation. And that's why people should get a hold of us to get the information, to get our interpretation, and maybe help them do better with their entry and exit points.
Excellent.
That's exactly the whole idea here.
Yeah.
Okay, so let's look at some other stocks that are coming up with earnings next week.
Okay.
Let's look at Amazon. I think that's a good thing to do, is go over some stuff that's going to be hitting in the news next week and get an idea of
That
where
is
we're
a
at.
good idea. And here we're stumbling again, right on that. And it says we're under the 55, greater than the 21 and 200. So with the 21 down below the 55, what we're looking at is death cross. So if that's to be believed, we're going down.
Yeah, it seems to me like on my shorter term stuff, if it starts failing at 132 area here, that wouldn't be very good. And yeah, there is some resistance that it peaked through at 133.39. So this neighborhood 132, 134, is pretty big neighborhood. If you can get through that, maybe it could start matriculating back up. Right now, it just looks like it filled that gap around 135 and is rolling over just a little bit.
It did. And this histogram down here showing green lines like this moving up toward the zero line, that would suggest we're moving up in the next, by the 23rd.
Yeah. Now, again, you're going into a great seasonal time for some of this stuff, because you got the holidays coming. And of course, people like to buy stuff on the holidays. So, there's that tailwind to it. So we'll have to see. And their AWS revenues are always, interesting to see. Let's take a look
What
at.
do they give their children stocks for Christmas?
Yeah, well, like I say, a lot of people like to use their Prime membership and stuff like that. The another one up there is Microsoft MSFT on the that's coming up next week. Let's see what the story is there.
Well, it's up above the DMA, so it's moving up. And look at this, the histogram's green and it's just about to cross the zero line. So we're moving on up in that one.
Yeah, the big key to that one was that it held the support at around 325. And when it held that support,
and that's right there where that 21 moving average is.
Yep. And so that's why that thing's looking pretty good on the upside. Yeah, on the short term here, let me just see something here on the RSI. Yeah, it'll be interesting, because the RSI on my monthly is in around that 60 neighborhood. And my view on RSI is, that 60 neighborhood is either a high point and the thing fails from there, or if it gets through that 60 neighborhood, then you could have an acceleration phase to the upside. So Microsoft,
we stay overbought for a long time sometimes.
Oh, yeah. But I mean, like I say, if it rolls over from 60, that sometimes is a tip that move is over. So like I say, what I'm seeing here on Microsoft is, again, like the other stocks, there's some pretty exciting time here, because, if we get through this number, Microsoft could accelerate to the upside, and for all it's going to go back up and test the 360. If this stock market breaks out of this range above 44.10, 44.20, that's probably going to happen.
We've got this old gap back over here too that needs to be filled up to that level. So at least we'll go up to the 344, I think.
Let's just see that 344. I have to go a little further out to see that. 344. I don't know how some charts show gaps and some charts don't show gaps, but you see a gap there?
Right back here. You see this little, it was a gap on the way down. So it gapped right there
Are you
on
talking around like July 26th or something like that?
July 26th.
Yeah, okay. Yeah, there's a tiny one there.
Yep.
Well, anyway,
And
the
it's already
momentum, the momentum is to the upside on Microsoft, that's for sure. And like I say, it's either probably hitting a high point up here, or you could be seeing a deal where it could accelerate to the upside. And again, it has news next week, so news can can get you going. How about Google?
Oh, I love Google.
Yeah, well, they got news coming out next week on the 24th.
24th again. Come on. I've got another process running that's slowing this thing down.
Yeah, this neighborhood right around 139 is interesting. If it can maintain and stay above it.
Yeah, I think we're going to come down, see, and touch the DMA right here.
What did that come in at, about 136 or
134, 135, right in there.
135? Okay,
I
I
think
got
we're
a neighborhood of averages coming together around that number, so that would make sense.
Yeah, I think that's going to drop to 135 and then bounce and go on up.
Yeah. Yeah, the direction of the trends on Google is looks very up. So now the only question is has it really run out of steam? Because I got that RSI again right in that 55-60 range on the 1 year. And again, if you go through that 60 number with conviction, that's how you can accelerate to the upside and bring that RSI into the 70s. And if you bring RSI into the 70s, this thing's trading 150 or better, probably making all-time highs.
Let's look at that RSI for a second. Okay, so there's where the RSI is right now.
Yeah, and it's not really, confirming any big move here. It's kind of like flattening out while the market's made new highs, which I don't like that much. You know what I mean?
I would
So like I say, if there was going to be a big pullback, it might come off the earnings thing. And if it did have a larger pullback, the more longer term support comes in just under 135, and then just under 130, and then right around 120. So if this was a deal where you've had a nice uptrend from 90 to 140, and if this thing is going to have a correction back down, it would probably happen off of that something in their report that they didn't like. But this thing is definitely on an upswing, right?
I would say so.
Yeah, and the all-time high is not very far away, right?
Where's the all-time high? Let's see.
I think I got all-time high around 150.
Let's look at the week. That might tell us more. There's the all-time high back here.
Yeah. So I mean, that's not too much.
Not very far away, is it?
No. And if people are nervous, they might have, they might hang out in those magnificent 7. I mean, they might feel comfortable in this environment to hold the Apples, the Googles, the Microsofts, the Amazons, simply because those companies seem to have bulletproof financial statements, and also have a pretty good angle on the competition.
And what are you thinking about Tesla?
Well, like I say, I haven't been a big fan of the electric revolution, so
Are you an anachronism?
Possibly. But no, my feeling on Tesla is that it's back on the upswing since it got above 180, and basically it's hanging in there trying to maintain it. 220 is a big support zone for me on Tesla. And when's Tesla's earnings? On 10/18. So they're this week too. They're going to be coming Wednesday.
Yeah.
So like I say, Tesla could pop, very nicely, up towards 280, I guess. If they announce that obviously their margins are still at 18% or better, because their margins used to be much higher, and because they're discounting, their margins came down, but people think that 18% is a big number.
We're going to head for 300 on this one.
Well, yeah, like I say, I would be much. I would jump on the train and it might gap right through me. But I'd like to see this thing trading above 257 and 260. And
Right
if it
in
goes
there.
above 257 and 260, I don't know anyone who'd want to be short at that point. So it could be a deal where that could be where it gets the acceleration
Well, if
phase.
it
You know what I mean?
breaks through this 21 moving average, then you're right. It's going to go right on up because that's where it is.
Yeah. So I mean, and it is pointing up. So I'm big on the direction of the moving average too.
Right.
So, like I say, I certainly, yeah, a lot of this stuff is really going to break either way, with the bias possibly to the upside.
Yeah, I think that's where just about everything is
So,
right
in
now.
other words, a real surprise. I mean, a real surprise would be a tank job on all this stuff.
Oh, yeah.
So,
Oh, look.
the
Oh,
preponderance of the evidence that you
yeah.
see is
Right.
that the things will break to the upside. Wouldn't you say that?
Yeah, I would say so. But look at what the S&P just did. There's one big bar straight down.
Yeah.
Ah.
Hey, listen, I have a main theme in life that high interest rates are gravity for asset prices. So,
Mhm.
that's why anything that goes way up in price, I'm always concerned that that is not going to last.
Yeah, they usually come back and fill those gaps.
Yeah. And like I say, sometimes Tuesday's a reversal day, so we got a strong move up on the S&P. I've got a moving average coming in at 44.33. I would
On what?
on E-mini.
Oh, okay. Let's take a look at that real quick.
Yeah. So my feeling on it right now would be as long as we're under 44.33, that this could be something that doesn't follow through. And Tuesday being sometimes a reversal day,
Turn
I
around
would be very
Tuesday.
much watching for that as well.
And yet we're below the 55 and greater than the 21. So that's another one of those death crosses.
Yeah. But today is a very strong day, and again they came out buying, and the momentum is the upside. But on my on my 1 day graph here that I use, it's still it definitely gave you the buy signal all the way up. It gave you a little bit of a sell signal. Now it gave you a little, so it's choppy. And now, like I say, this high point that we've received here at 44.11 will be very interesting. And the upswing comes in on the short-term stuff for the
Yeah.
day at
Yeah.
44.04, 44.03.
When we started
You're in a
talking,
pretty tight window,
yeah, you are. When we started talking a few minutes ago, the Dow was up 400 points and now it's up 271.
Yeah. Well, like I say, I had a divergence up here on the RSI with what's your current on E-mini?
Let's take a look. This is
Yeah,
the
because the first run up I have at 10 o'clock in the morning had an RSI of 77. The last run up we had a 65. So sometimes when it diverges like that, it shows like it's running out of steam.
well, my computer's obviously run out of steam here. We're not getting this window up. Let's see if I can close a few.
We're waiting for your friend Data.
That's right.
Data's taking his time. We got the porch light on and we're waiting for Data.
We're waiting for data to show up.
Yeah.
That's like waiting for Godot, right?
I was going to say that. I don't know how many people know about that little joke, so I didn't use it. You know what I mean?
Well, old timers like you and I know it.
Exactly. Exactly.
Oh, come on.
As you're doing that, I'm also going to just talk a little bit about the price of gold, which just blew out every short blew out every short in the world last week.
It did, didn't it?
But I'm sure your stuff was pretty similar to mine in that there was a ton of support in that 1830 area, which is pretty much where it went down to. And then getting above the area of 1900 was very important. And now, frankly, under certain circumstances, if it can take out 1975 and get going, this could be the move that blows out that 2000, 2100, and this could be the big move people are looking for.
Yeah.
Because I noticed the M2 money supply, which was way up 26% in 2021, 2022, dropped to April's low of minus 484. So that's a big contraction in money supply. But now I've noticed in the last 3 months that the money supply is rising. So if they are going to go to printing or any type of easing, that would be the stage where gold, and you notice Bitcoin and Ethereum's going nuts.
Yeah.
So, if they are going to start increasing the money supply, which they may have to do because of all these wars they're going to have to finance, if that occurs, that could be the shot across the bow that gets gold and Bitcoin and Ethereum going.
I don't know
Right.
about Bitcoin and Ethereum. I agree with gold,
Mm-hmm.
but I see more and more announcements every day popping into my email. And I don't know how much of it's just spam or speculation, but they're talking about the digital dollar. 110 banks have agreed to go with the digital dollar.
I think that's obviously spam. But if you put up GBTC,
Well, I
let's
can't.
go over one at a time. Let's go. You got the gold up there. Let's go over one at a time if we can get data.
Well, I'm trying, but it's not working.
All right. Well, while we're doing that, I'll just give a little bit of information on the gold because again, the big important area for me on the gold right now is to stay above 1903, and it seems to be doing that now. It had a big pullback this morning, but it's already firmed up. So on the short run here, I'd love it to stay above 1903.
Do you have
And
charts you can share? My charts aren't doing squat. TradeStation's not going to like to hear from me after a while.
well, I need. Can you hit a refresh button or anything like that?
Yeah, but it doesn't do anything.
I could just share my charts.
Yeah. Why
Yeah,
don't you share yours?
Okay, hold on, just
stop my share here. David, you're gonna have to
oh,
share this with me so I can show them that their program wasn't refreshing.
oh, okay, yeah, I can get you.
And you got the 50 and the 200, which are great ones to work with, as well. They tell you a lot. And this is on S&P.
Now let's see gold.
Now let's see gold.
Look at that.
Yep.
Look at that big bar up.
Yep.
Wow, it's a big
No,
jump.
I get, well,
It went right to that
you
trend line.
look reversion to the mean. I mean, look
Yeah.
how far away from the mean. And once people are starting to see that the deficits are I mean, they're doing the math. The deficits are out of control. The Republicans control the House. Getting tax increases through is going to be a very, very ridiculously tough racket. And so what are they going to have to do? And that's why I'm bringing up the money supply is starting to turn up. So if you hear that the money supply is going to go back up and you hear the dollar, which hit 107, may come back down, you're not going to want to be short gold at 1830.
No.
And that's the story from last week. And of course, when everybody wants to cover their short positions, the guy on the other side of the trade is going to raise the offer by $100 because he's not going to stand in front. He's not going to stand in front of a freight train.
Nope. Falling
Now
down.
he's filled everybody on this move up to 1945. I mean, if you were short gold, I'm sure you're stopped out by now, unless you are on a distant island and don't get quotes. And I have a long-term average that comes in at 19. Where's it come in? Hang on. Yeah, I have some averages that come in at 1950 ballpark area. So this neighborhood here is kind of important to get through. And if you get through it and, they start hearing about how much money they got to send over to Israel, and they start seeing the fiscal deficit just going off the charts, and they see the money supply starting to rise. And if this dollar, let's look at the dollar. I thought it was a little bit extended at 107. I thought it was going to have a reversion to the mean a little bit. It is today, isn't it? Yeah. What do you think of the dollar, Sonny?
I'm looking for the chart right now.
Yeah. Yeah, because I thought it was way overdone down at 100. A reversion to the mean made a lot of sense. Then it got above 102, so there's your buy. Said now you're riding it up, but then it goes way up towards 107 or 107 and change. And I just thought a reversion back would happen. It has happened, but to me,
but it hasn't.
If those,
So if we go down to that what is it? Looks like 105 or so where your moving average is.
Yeah, exactly.
And the RSI is tapering down.
Yeah, the 107 area I thought was pretty much the neighborhood where it was going to roll back down.
Mm-hmm.
And you think about it, you got the trifecta going against the dollar now. The deficits are going to go through the roof. You've got yields backing off a little bit. You've got the money supply starting to turn up. And you got these Fed guys talking about how, we're done. You know, we think the bond market's doing our work. I mean, as far as I can see, the inflation numbers are still almost 2 times what they're looking to get it to.
That's right.
The labor market is just not going down at all. And owner's equivalent rent is actually rising twice as much as they expected.
True.
So, this the Fed is done story. I mean, how many times have we heard the Fed is done? Haven't we heard it since about 3.5%?
Well, those are the rumors, but the Fed never says they're done.
I think the people that spread them are the guys who are long bonds who are getting wiped out. You know what I mean?
Yeah. Yeah.
Because they're praying that the Fed is done because their bond portfolio in the last 24 months says it looks like a tech stock.
And they should have gotten out of bonds a long time ago.
Yeah, but some people sit there like Buddha because they just get the income, and their broker's probably saying, "You don't want to get out of here; you'll lose your income."
Yeah.
Rather than saying, "If we don't get out of here, you're going to lose your butt."
Right.
What do you want to lose, your income or your butt, sir? You got to make a decision, right?
Right.
Oh God. So anyway, let's look. Yeah, so we got the dollar possibly pulling back. You got yield. Let's look at. Can you get the 10-year note up there?
What's
On
the
my
symbol?
system, it's the $ TNX. There you go. And that just had a little bit of a reversion to the mean too. You know what I mean? It got very extended and then it's come back down, a little reversion to the mean. But, people are, what I read is that, this budget deficit as a percentage of GDP is extremely high.
Yeah. And my chart of 10-year notes is not 10-year bonds, but 10-year notes.
Yeah.
We're moving on down.
Yeah.
We're below.
Well, like I say, if the yields back off and they print money and the deficit goes to 6% of GDP and that gold gets above 1950, 1975, these people that have been looking for this big move up to, into the 2000s, they may get their wish. Obviously, it's like a broken clock. You know what I mean? They could be right twice a day, right? But
right. No, I think the gold's going to go on up to the 200 period moving average, which is 1987.
Yeah. The only thing that has me on the gold on my long-term graphs, the reason I've been, not negative on gold, but just don't get into it yet, was until we went down to 1840, was that the move up in August of 2020 had an RSI of 83. The move up in March 2022, the RSI was 60. The move up to 2072 had an RSI of 61, 56 actually. And then even now with this big spike, we're at 54. Mm-hmm. I think if we are going to get above 2100 and really go, I'd like to see that RSI plow through 60. And if that happens, there'll be plenty of room on the upside to keep going. Otherwise, these big spikes that you see have definitely not, fallen through.
On my histogram, the green bars are just about to poke through the zero line.
Yeah, yeah.
I do think we're going on up to that 200-day moving average, 1985.
Well, like I say, that's the neighborhood that, in other words, a lot of people buy gold. They don't want to buy it for a $20 move or a $10 move or a $5 move. They want to be in there when it goes up 10 or 20%.
Yes, of course.
And so to go up 10 or 20%, like I say, you got to get through that 1975. You got 1985, who's going to quibble over $10 if it's going to go to 2,300, right?
Right.
But again, the jury's still out until you can actually achieve that. Because I think a lot of stuff that went on last week was people, covering shorts because of the fact that it went up so fast. You know what I mean?
Because we got another war.
Yeah. And like I say, when you go from 2100 down to 1840, there's a lot of people shorting it.
Yeah.
So we'll have to see. Like I say, this is the week where we're going to see if it holds its water. I like that 1903 number as a support zone. So if it goes down there and holds, I'd find that very impressive.
Mm-hmm.
And of course, you're telling me, and I'm telling you, this 1975, 1985, so surpassing that, I would find very impressive.
It would be.
Yeah.
I've got charts again. If you want me to share them, just let me know.
Sure, let's do it. Let's do it.
Okay, you should be able to now.
1, 2, 3. There we go. And that's what I'm looking at for gold.
Yeah.
And you see right up here is the attractor, right where all that
Yep.
it's a price over here, over here, over here. It just gets hitting it.
Yep.
So that's where I think it's going to stumble, going to have a trouble with 1985. And
Yeah.
then I think we're going on up to right above 2000, just barely above 2000.
Yeah. And like I say, if those three things we mentioned were the yields back off, the Fed has a meeting and they start saying we're pausing and this and that, and then basically the dollar backs off towards 105 or less, you'll have the recipe. And like I say, I'm watching M2 money growth because when it was plus 26% back in 21, 22 and started to turn down, that was also the beginning of asset prices dropping quite a bit in 2022.
Mm-hmm.
And they took it from plus 26% money supply growth, which was like double or more on historical. They never have printed money like that. Well, the Fed balance sheet went from 4 trillion to 9 trillion.
Yeah.
So that's not a joke. And then they trying to bring it down with QT, but they're having a hard time doing that. And then basically they went to a minus 4.84 money supply growth in April of this year, and now it's turning back up. Well, after that kind of a long move down, once it starts turning up, maybe it's going to trend that way. At least you'd have to respect it as a possibility.
Yeah. Well, you need to respect all these possibilities because sometimes they come true.
The cost of living has just really gone through the roof. This guy Cooperman was talking about it on TV that he went to see a Yankee game and it cost $13 for a pretzel.
Oh, no.
$6 for
Oh,
water.
No. Oh my gosh.
So the point being is, and obviously that's a unique situation with a ballpark, but believe me, as I go around town, you go get a drink at a nice restaurant and they want $18 a drink. And
$18 for a glass of wine.
a steak at a nice restaurant is, way over 100.
Yeah.
So, and then, when you go to the gas station and fill up your car in San Diego, you got to be up around $60 or better, right?
We're up at, well, I spent
I mean, if you go from empty to full, what do you think you're talking on
I
then?
spent 95 last week to fill up
90, there you go.
$6 and some a gallon.
Yeah.
But
So
we're the most expensive gas in the country.
yeah, the old phrase, something's got to give. But I mean, the world can keep going, I guess, with this stuff because it has for a long time. But
and it doesn't matter what the unions ask for wages; it's not enough.
Yeah, exactly. And so the events coming together here, where the strikes are going to raise wages,
and that raises more inflation.
Exactly, because the people have jobs and now they're making more money, and people aren't going to drop prices unless you stop buying their stuff.
Right.
And Americans who have money in their pocket, generally spend it.
Right.
So that's what I'm trying to say. It's a very wild time out here. You know what I mean?
It really is.
It really is. I mean, you could make a case for everything breaks and we have a deflationary drop, or you could make a case that they're just feeding them. And now if they're raising the money supply, they're just going to keep feeding this fire. You know what I mean?
It's just going to keep going. I don't
think one guy made a good point. He says that, the way things are, if we don't get a recession correction, that the upside in stocks may be somewhat muted because of the fact of all these factors we're talking about. And if returns on stocks longer term are going to be any good, it's going to be because we have some kind of recession and they correct all these prices. And now you work off the lower base.
Yeah. But I still don't think we're going to see 2% inflation anytime soon.
Not with a labor market, that just doesn't quit. I mean, the claims last week were very low. The JOLTS report, are still 1.5 to 1. Before before COVID, they were not at that level.
That's true.
So, I don't know. It's going to be a wild one. Let's you looked at the price of crude. Let's I don't, but you couldn't get it up there. Can you put up the crude now?
Well, let's see. Yeah, there we go. So
You got attractors up there. What are those top attractors?
this?
You know, the ones, the green way up top, 90 what?
Oh, up here?
Yeah.
Yeah, we've got that's a top of the sunny bands at 94. Upper outer band 94. I think that's where we're going.
Now they say our guys and Saudis are having some conversation of a quid pro quo of some type where, if we help them with some of their weapons and then basically they can maybe supply a little bit more oil to keep it down for a while or whatever. I don't know if that's going on or not, but the price action does seem to be having some trouble at around that 87 area.
Right here, we're having trouble at 87. Yep.
Yeah.
We've got the 21 moving average right there. We've got the 55s down below that. I'm moving things I don't want to move here.
See, this is a classic case where I've got cross currents here on my 1 year. I've got my shorter term average pointing down at 84.38. The market's trading above it, but if you get back underneath it, it's back on the slide. I've got an intermediate term one, excuse me, a longer term one at 85.55, so it's right on the number. And then I've got another intermediate one around that 87 area. So you got the averages kind of going in different directions a little bit. So it's like everything else. I mean, we're going to probably hit some hitting the fan in August. I said to people, September and October are going to be wild months.
Yeah, and they are.
And they are because the winds of change are they tend to blow at this time of year.
Yeah.
Now the general theme is that they blow to the upside ultimately, and November's good, and so is the end of the year. So that's the way people are kind of thinking it's going to work. And right now they've got a reasonable expectation because the momentum is still to the upside a bit.
Yeah, but October is always a dangerous month.
It's a dangerous month because, again, positioning I don't think is particularly negative right now. And this is what Cooperman was saying. He says, these markets are not priced for any type of a crisis.
That's true.
In other words, they're not priced for an oil crisis. They're not priced for a debt crisis, a credit crisis. So that's the reason why I think it's going to be quite volatile as we go in for the rest of the year.
This is an interesting chart.
Now that you have your charts up, let me go over a couple more. What about Meta? That comes out next week on the 25th.
Okay, we'll take a look at that. Facebook. And we've been moving sideways until just last week we started moving up again. Meta has been just pretty much solidly up for a long time.
Yeah.
No, I think we're going to make it back up to this upper band, which is at 328.90. Probably today or tomorrow. Looks like.
Yeah, this is clearly where they are going with their monies in this market. These large cap techies, and right now, I got this thing wanting to stay above 313, 307, and 304.
Yeah.
And
I've got 309 showing on mine as the boundary line.
Yeah, the only thing that makes me concerned is I do have a little bit of a divergence on my 5-year graph. The first time we went up to this neighborhood, the RSI was 77. And now on this time up, the RSI is 68. So, I would be watching Meta very closely here. And, we start breaking under 319 and breaking under, start getting the thing under 316. That would change my tune on Meta pretty fast.
Oh, yeah. Oh, yeah. If we drop below 309, I'm changing my tune.
ACLS is a pretty popular stock, or had been.
That's Lou Gehrig's disease, right?
Yeah, but I don't know that I don't think that's what they specialize in. Because I got that thing hanging on right for dear
Or
life
I
here.
guess that's your ACL I'm thinking about, anterior cruciate ligament.
Yeah,
Yeah, well, I don't know what that is.
that's a tech stock, but as you can see, it had a hell of a run.
But what did they do?
I'm not 100%. I just know that some guy I was doing some reading and people were getting quite positive on it again. And like I say, it had gone from 20, it went from 200 down to, the 150 area. So I've got it on some pretty significant support down here
I
around
think supports down
the
here at
160 neighborhood. So
I
this
see.
160 neighborhood, I think, is very key. If it busts through this 160 neighborhood, it's going to be sayonara. But if it doesn't, it'd be interesting to see if this thing could blow out 170 and start making a run back up to this gap, which is between 185 and 190.
I think it's moving down to 153 and then going to pop up.
I'm going to pop.
They
153 would be a good buy zone.
David, you're
they
familiar with
make
the company.
semiconductor equipment,
Yeah.
semiconductor manufacturer.
It's part of the AI thing.
Yeah.
And so that's what makes it kind of interesting. I thought that would be interesting.
ALS is the disease.
I know.
What about some of the? So we went over most of the techies that are going to be happening next week, and then we went over the Bank of America, which is happening this week, and then why don't we just look at a couple of the oils and see if there's something happening there?
Yeah,
Let's go to like a. I tell you, they still love Devon Energy, although it looks terrible. DVN. I mean, it actually has, to me, the best value of all the oils on the board from standpoint of it. It hasn't broken above 50 and gone nuts.
Right there's the buy signal on Sunny Bands, and it's now up above the DMA, which is still purple but turning.
Yeah.
And it's going to go on up to this outer band at 50.53.
Yeah. I'm just wondering, is there anything that would make it break out above that, let's call it that neighborhood around 53, 54, and go on a retest up towards that 80? Is there anything on the...
Oh, I don't think so.
No, you don't think it has that kind of zoom?
I don't.
Yeah.
You look at it on longer term, what it looks like.
Well, it's one stock that did not participate in the big run that we just had in energy. So I just was wondering, maybe there's something wrong with the company. But next week you've got Chevron CVX, and let's see what's going on there.
Patience is a virtue.
Yeah.
There we go. Same chart as the one we just looked at. It's
if they get a great earnings report, it'll be interesting to see if they can pop this thing through the 168 area and go out and make a run at something there.
I think there's too much resistance. My attractor, where you see, comes from over here, all the way across there. That's too much resistance for right now. Not necessarily for sometime in the future, but for right now, it's too tight.
Yeah. And it does look like if it started to fade under 160, there could be some more significant downside to it.
Yeah,
another one's coming out on the Schlumberger. That's going to come out on the 20th.
What is the symbol?
SLB. They're in the more of the servicing area.
Yeah, and that one has room to go up. You see how it's above the DMA here, and it's heading on up to the upper outer band.
Yeah, I mean, when we have a shortage of energy, things that go and help explore for more obviously might do well, and that's what this thing's all about. Let's look at a couple of golds. Newmont Mining, NEM. I took a taste of this thing when it was at 35, and that taste continues to be a reasonable taste.
Oh, cool.
Well, look at the 20-year. I mean, the darn thing was at it made a new low down here, and I had a divergence on the RSI a little bit. And
it's still fighting that low.
Yeah. But there's plenty of overhead clouds here. You got a gap there that it might go to fill right above 44 if it gets cooking.
That's a big if.
Yeah. But I would tell you this, because they just bought Newcrest from Australia, which created a huge copper and gold company. If gold is going to break out above 1985 and go into those 2000s, you would think there's some potential here.
Might be.
You know,
Sometimes the gold companies, I mean, the metal itself can go up and the companies
no,
don't.
they don't. Yeah, just like in oil and them don't run hand in hand.
Yeah.
But I would think a move to 2300 gold would not hurt this company.
Yeah. 2300 wouldn't hurt anybody. That would be a nice thing to have happen.
Exactly. And in China, Las Vegas Sands, LVS, that's the one I kind of look at if China is really going to come back or not. And they just did a stimulus, the biggest stimulus since 2020, $39 billion of 1 year credit or something, the People's Bank of China. And so, this thing was a darling of mine as it went to 66. And obviously it's been, now is a potential for a reversion to the mean, isn't there?
Yeah, I think this thing's going on down.
Okay. But I'm saying if it did hold the 44 and started to break above, like, say, 40, 48, where there's a gap.
Well, right here's the 41 is the support that I see. Well, I think it's going to go on down to that.
Go down to that. Yeah. This one looks pretty negative. There's no doubt about it, which means really whatever they're doing in China is probably not working, because when things are working in China, they're over in Macau gambling.
Yes. Yes. Have you
So
been?
that's why I caught the move to 66, because that was coming out of the COVID thing where China went nuts for a while.
Yeah.
Now, when that thing rolled over at 66, that was really telling you that whatever they're doing to get out of their mess isn't working.
Yeah. Well, their real estate's still in the tank.
Now, one last one for people who think infrastructure might be a big deal. FCX is the industrial metals I keep an eye on, because, there's not unlimited amounts of this stuff. So I'm kind of keen on this Freeport McMoran as long as it holds 35. What do you think there?
And that's questionable, but it does look like a little buy signal on that. And it'll go up at least to the 21-day moving average right there.
Now, where are you at there? Because I got it, if it holds 35, it's a good deal. And if it breaks 40, it's a great deal.
If it breaks 37.75, it's a good deal.
There you go. Because then the momentum will start picking up.
And
then just two more on that, and then we'll wrap it up. Cleveland Cliffs, CLF. These are industrial metals. Now, they're supposed to be trying to buy U.S. Steel, which has been bid up because of that.
Oh, wow. That's a big buy.
Yeah. Well, we'll close out with X. X is U.S. Steel.
Okay.
But yeah, you can see X, and I loved X in the 20s because, I just, yeah.
Now
You
there's
can
a
see in the
chart.
20s under 25, it was clearly telling you something's going on, buy. And then obviously once that thing came out, it went up to the 30s.
And it's above all the moving averages right now. So
yeah.
it's
And if you look at a long-term graph on U.S. Steel, it's really shocking how much that price could get going under certain circumstances.
Yeah. So on a long-term chart, that thing just looks sideways. It looks like it's gonna just drift around sideways forever. But if the U.S. Steel thing comes through, we're going on up.
Well, we got a lot of action in stocks. We got a lot of action in interest rates. You got a lot of action in the dollar. You got a lot of action in gold. You got a lot of action in just about everything. So why don't you tell people how they can get a hold of you and what you can help them with to try to figure this stuff out?
Absolutely. MoneyMentor.com is my website. My phone number, my cell phone is 760-908-3070. My email is sunny@moneymentor.com. And if you want a free trial of my Sunny Bands and the other indicators you see here, just text me trial and we'll set you up with it.
Okay, sounds great. As far as optionprofessor.com, we do have a 6 PDF reports we send out on option trading, plus the best stocks by sector. So when you look at a certain sector, we've got the stocks listed that we think are best in that sector. And then we send you a link with our indicators, and we give you an hour on the computer with us where I can explain how to interpret them. And that's been extremely helpful to people. because they're not complicated to work with, and they're based on price and time and momentum and reversion to the mean, which are very solid things to base on in our view. So anyway, yeah, go over there and put your information in. I'll call you back. I'll get you set up on getting the information, and then we'll take it from there. So that's optionprofessor.com. All right, well, we're at the top of the hour, unfortunately. And, you know, like I say, if anyone is listening, you know, want to get information from us, you know, contact Sonny or myself so we can give you a hand and throw our hat in the ring on your research. And I think between our data and our experience, we certainly have something to add, don't we, Sonny?
We certainly do.
And of course, since I'm the option professor, if you want to talk about how the weekly options work or the monthly options work, I can explain that as well to you as well. So there's a lot to learn if you put the effort into giving us your information so we can talk. All right, David, I'm sending it back to you. Thanks everybody for being here. And Sonny, thanks a lot for being here again. It's always great to see you.
Oh, thank you so much, both of you.
All right. Yeah, another great discussion today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and Substack and your favorite podcast app. And you can also just go to TimingResearch.com to get access to this this recording as soon as I get it posted, as well as any of the past shows and presentations. Also, be sure to join us on Thursday. This week for the next Analyze Your Trade event. And that's been a very popular new format we've been doing for the last year or so, where I have several great educators on, each have about an hour, and you in the audience can just ask or request symbols and ask questions. And so no presentations, no set agenda, just answering questions and looking at charts. So
I'll be there Thursday.
So yeah, Sonny's going to be on this one, and the option professor as well. And this is actually going to be the largest one we've ever done. This will be 10 analysts throughout the day, starting at 10 a.m. Eastern.
That's fantastic.
So yeah, be a good event. So again, be sure to join us Thursday, October 19th on TimingResearch.com. And so just want to thank my guests again for today, Sonny Harris of MoneyMentor.com and the option professor of OptionProfessor.com. Thanks, everyone.
Thanks, David.